market is gaining momentum again. Some stocks approaching record highs. But is it a trick? What should you be looking for? What the heck is Warren Buffett doing? I'll answer those questions for you right now. Welcome back, everyone. In this video, we will talk about why I believe another crash is coming. And there are really three main points I want to cover: Warren Buffett, macro data points and other data, and when we will see the next market crash. And if you like making money and want to learn from a guy who's not going to talk about rented girlfriends anymore, go ahead and subscribe, hit that little notifications bell, and while you're down there, go ahead and give the video a like as well. Remember, this is for entertainment purposes only. I feel that a second crash of some sort is coming. Hey, I'm typically a positive guy, especially when it comes to the markets. I love to invest in stocks and real estate, and I believe strongly in both markets. But I'm full stop now on all my investments except for Tesla, which, as we have discussed at length in the past, it's just a different animal. I'm no expert, so it's possible the illness was just a blip on the radar and we will be back at Dow 32,000 by Christmas, and houses will continue to sell at record prices later this summer. But even though I see trouble brewing, I'm not necessarily selling either. I sold everything I wanted to sell pre-illness. Not because I saw this illness thing coming, because nobody did and they're lying if they said they are, whatever. But because markets, both real estate and stocks, were just too frothy for me. So I took some profits and got rid of some of my dogs, because if they cannot perform in a great market, what the heck are they going to do during a down market? And all markets go up and then down. Again, not that I saw this downturn coming, I just knew it was a little frothy out there. But I just don't understand what is going on with the stock market right now. The data just isn't supporting this run-up. So I will show you guys exactly what I'm seeing, in my opinion, of course. And I'm sure you guys will let me know down in the comments or on Discord or Patreon if you agree or if you disagree. And at the end, I will tell you where I feel the market should be trading at and what I'm currently doing, so stick around for that. So let's talk about Warren Buffett. So what has Berkshire and Warren Buffett done during this downturn? You know, they deployed all their cash and bought all of these great deals that came, right? Wrong. They have been busy raising cash. They sold airline stocks to the tune of $390 million or so. And they reportedly borrowed $1.8 billion in a yen bond offering. In the current economic environment, there are many companies who need to borrow to shore up their liquidity. But Berkshire Hathaway has loads of cash. I'm talking like $128 billion with a B. However you make that symbol. I really should figure out how to do that with my hands. So Berkshire does not fit into that category of companies that need cash. But yet, the only tangible thing they have done since the initial start of this recession is build cash. Keep in mind that during the last downturn, Warren didn't rush into anything. He waited as things deteriorated further, as he saw no reason to jump in. He did not buy into any of the rallies that happened on the way down. Look at this chart right here. Look at the various rallies in the market before it continued to falter. In the end, he ended up cutting incredible deals to buy companies known as the, Warren Rescue, or what essentially amounts to a bailout for those companies. And he bought other companies as well at huge discounts. He has spent an entire career being told he has lost it, he missed it, he's too old, and the list goes on. This happens to him every time the market takes off and he doesn't go with the flow. Instead, he waits for opportunities. And guess how many times he has been right in the end and the experts have been wrong. His record speaks for itself. Long story short on this, he didn't buy a ton of stocks on the dip, he instead raised more cash. What does that say to you? I mean, outside of building cash, the only thing he did was get a computer. Because he didn't have one in his office yet, so he could watch my videos and subscribe and like them. Seriously, I heard that just the other day. Can't believe you guys didn't see that in the news. It's so strange. Macro data points and other data. I can nerd out with the best of them with a bunch of technical charts and all kinds of other shenanigans. But that's fun stuff you do in a dark room when you're by yourself. Or something like that. Sounded creepy, didn't it? Anyways, I want this channel to give information in an easy to understand format and not get too stuck in the weeds on things. This current down market was the result of a crazy illness that's led to this recession. And recessionary bears last on average about 18 months, mainly because recessions take time to snap back and cannot normalize instantly. Will we be in a recession for 18 months? Who knows as of right now. While we have experienced an instant snapback in the market in the past, it is super rare. For stock prices to turn back around into an instant bull market requires two things. The first is clear light at the end of the tunnel, meaning that the circumstances that sparked the recession are on their way to being done. We have flattened the curve for this illness, but there is no cure and there is no vaccine. I know there's conflicting information everywhere, but the path to being done with this whole thing is murky at best. There are still way too many unknowns. And the second piece of the equation is that labor markets and credit markets are both consistently swimming in the right direction. That's a hard no on both unemployment and credit markets. Look, we are approaching Great Depression levels of unemployment, and it's only getting worse. It was up again this week. And credit markets are almost exclusively propped up by the Fed, nowhere near or even moving towards what is considered normal. So the first piece is murky at best, and the second is a non-starter. We don't even need to talk about it. The market is acting like the economy is already going back to normal. All of the 30+ million people are already employed or will be re-employed shortly, and we will all just go back to overspending in the spirit of America. But despite the gloomy outlook and uncertainty, I do have some good news for you. The recession is not going to become a depression from what I've seen. Global central banks, whether you agree with them, hate them, whatever, have sufficiently taken notice and are doing everything in their power to combat it. Even the US Fed has started helping other countries with relief and guidance. So there is coordination this time around with other countries that was severely lacking during the beginning of the Great Recession, which actually probably made the Great Recession worse than what it should have been. While this global recession is going to be ugly, it is unlikely to turn into a depression. See? Good news. That deserves a like, if nothing else. So when will we see the next crash? So I believe we will see another crash of some form, or at least a retesting of the lows we experienced in mid-March based on one of these three things. The first is a failed reopen. If we reopen and have to shut back down again, that will cause a massive amount of money to flee the markets. Unfortunately, in this type of situation, it would probably mean starting all over again. So let me give you an example here to illustrate it. Let's say the economy is back up and running on June 1st, and come August 1st, we have to shut it all back down due to the illness spiking up again. That would cause an immediate and dramatic collapse in the markets because essentially a closure of the US economy from mid-March to June 1st was not long enough. So the market would immediately price in a shutdown of much longer than 2.5 months since the time frame did not work in the first place. And like all things in the market, there would be a massive overreaction. On the super optimistic positive side, you'd have people pricing in only a 3-month shutdown. I think the consensus mostly would be 4 to 6 months, and then you have some more on the bear side that would price in a year or more of shutdown. Remember, the Dow fell down to approximately 18,000 on this 2.5-month shutdown. So if the consensus would be 4 to 6 months, it's going to fall lower than that. The second thing that could trigger a downturn, bad news on treatments, vaccines, or cures. Right now, anything remotely positive on the drug front, even if it's just a rumor that's completely made up, is having a huge impact on stock prices. But if we have some sustained positive momentum on the treatment and vaccine front, the market would rally huge. But if it happened to fail later on in the testing cycle, it would really send shockwaves through the system and could trigger another sell-off. And especially as winter is coming and flu season is going to start. And no, that wasn't a Game of Thrones reference, although I guess it is similar. Either way, if we stick with the reference, we don't want to walk into the time frame where the White Walkers are coming and we have to start back to square one on a vaccine or cure. And the last thing I see triggering a crash is if you fail to smash the like button or subscribe. Fine, I know it was cheap. I'm sorry, couldn't help myself. It just really helps YouTube promote your videos. It's why big guys like Graham Stephan and all those guys tell you to smash the like button all the time. And finally, for real this time, the recession actually acts like every other recession. If this recession follows the movements in general like it should, this is just one of a few bounce backs before retesting or setting new lows. I remember when this market started turning around. It turned around based on talk of opening the entire economy around Easter, so on about April 12th. It's May now and just a small portion of the economy is open. But while some places are beginning to open, others have added another month onto their lockdowns. So now we are talking end of May at the earliest for huge parts of our economy. That doesn't look like the snapback economy the market is pricing in right now. So let's take a look again at this chart from the Great Recession. You had plenty of bounce back bull turnarounds before the market fell further. The talk was always, the worst is behind us. Get in now while it's cheap. Tons of money being pumped into the economy. Don't want to miss it, it's going up. Until it wasn't and the market rally was over and reality set in and the markets dropped further. In the end, I feel the Dow should be around 19 to 21,000 best case right now. In the midst of a global pandemic, it's approaching pre-pandemic levels. Really? The greatest investor ever appears to be sitting this one out. But he is the one who has lost it? Really? I still have plenty of cash to deploy, but for now, I'm hanging out with Warren. So the next thing you need to do is click this video right here for my reaction to Tesla's earnings call. Thanks.